Terrific. Thank you everyone for joining us today. We're thrilled to have you participating in our webinar. We're really excited to be able to share what I think will hopefully be very interesting and an informative topic with you today. We are here on and sponsored by the Legal Value Network. The Legal Value Network has as its mission to accelerate the evolution of the legal industry. We connect businesses of law professionals from law firms, corporate legal departments, alternative legal service companies, and technology providers who are focused on designing, building, and implementing the foundations of a more contemporary and commercially sound model of legal service delivery. And I'm thrilled to be joining Toby Brown today, who is Chief Practice Management Officer at Perkins Coie, and also the founder of LVN. Toby is the industry-leading pricing and legal project management expert with experience building pricing and project management programs at 4 Am Law 50 firms. He's an expert at client fee negotiations, profit modeling, establishing profit methodologies, developing fee arrangements, and monitoring fee deals. And he has experience with legal project management, including process mapping, process improvement, practice innovation, alternative staffing, and outsourced partnerships. My favorite thing about Toby, though, is his social handle, which is the Profit of Profit. So welcome, Toby, and thank you for joining me today. I'm also joined today by Thad Jampol. Thad is the co-founder and chief product officer of Intapp. Intapp is the leading provider of solutions that power connected firms globally. He and I both work there. I have the privilege of being the head of our strategic marketing. That is the brainchild behind all of the products that we produce and the solutions to power law firms across the globe, working with almost all of the large law firms in the world. Little known fact about him, his entire family is lawyers. He thought he was escaping the vortex of being dragged into the law until he formed a company that was an integration company with the first clients being lawyers, and now built it into a multi-$100-million enterprise serving these law firms. And just to cap it off, he also married a legal marketer. So much for escaping that, but welcome, Thad.
Hello, everyone. Glad to be here.
Terrific. So I thought what we could do in terms of starting off our discussion today is to talk about why we're each personally interested in this topic. I know, Toby, you were, I think, the one who actually conceived the focus here, and I know it's near and dear to your heart. So maybe you could start with why this is an important topic now to even be talking about.
Certainly. In my role, the number of things I oversee, forecasting has been on my radar for years, and I've been nudging and pushing and cajoling the firms I've been at to embrace it more fully, and that's been a challenge. And so due to this weird pandemic thing people may have heard of, all of a sudden it became a very, very popular topic. And so that was one of the ideas. One of the reasons I came up with is I'm like, okay, we have a windows opened where all of a sudden forecasting is okay. And so I thought it would be a great idea, and I'm very excited about this topic because to me this is really cutting edge, driving law firms towards success. So I thought it'd be a good idea to say how could we really explore this topic to see how a law firm could and should embrace it in order to become more competitive and just a better run business.
Terrific, and we're excited as well. And Thad, I know you and I had traded some notes yesterday about why you were so excited about this topic.
Yeah, I'll share two. I think one is probably more obvious than the other. Intapp started from its very beginning days as a data-first company. Our mission was to try and understand data and easily share it between applications. And one of the most important parts of really understanding data and making that data valuable or finding the right use cases. And for a large chunk of our time in the marketplace, and I suspect for a lot of people on this call, data was primarily being used for a lot of efficiency-driven areas, a lot of automation, which is still very important. But I think where the world is going now is much more multifaceted than that, and using data for real insight. And I'm really excited by this because I think this is a critical insight and application of data that can really help firms. So I think that's the big reason. I think maybe the less known reason, and I know marketing hates when I talk about Intapp's early days because it makes us feel small, but so forgive me, Pam, but in the early days of Intapp, I believe we were the world's best forecasters because we had to be. Because if we were off a little bit, it wasn't like we were going to have a bad number to report to the board. It was we were going to be out of business. So we have some funny graphs that show that we were weirdly accurate for a company our size, and a lot of our forecasting, particularly on the cash side.
Probably did quite a bit better than we're doing forecasting the future of the pandemic at this stage, right? It's on everybody's mind.
Pam, if I might interject here, one of my concepts for this, or one of my thoughts for this program was LVN. One of our core, core values is that we see companies like Intapp as participants in this. Not just providers of services, but participants. And so, Thad talking about this, and especially about the early days, is very, very important, because what a law firm can do is learn from Intapp and companies like Intapp about how to run like a business. And so Thad's experience in living, breathing, forecasting over the years, he's sharing that with law firms now. So I just wanted to point out that is a high value knowledge that Thad has that he's now sharing with us, and I, for one, appreciate it greatly.
Terrific, yeah, and I know for me personally, my last job before I joined Intapp about a year ago was heading marketing for a company called Anaplan. While I was there, I invented the concept of connected planning. Obviously, planning and forecasting are kissing cousins, if we want to put that, and thinking of this idea of how do you really embed planning as a critical discipline across every industry in the globe, and how do you connect people, process, and data to be able to deliver a true picture of what's happening and a better ability to make better decisions faster. And I think we'll be talking about that a lot today, but seeing the transformational aspect of actually being able to make decisions, whether they be on somewhat predictable shores or the most unpredictable shores of the black swans events that we're dealing with today, I think is even more important than it was when we worked on first conceiving this whole idea of connected planning. So
Absolutely.
Great topic and great discussion. And what we'll be covering today are the following topics. So we're going to start out with what is business value forecasting? What do we really mean by it? Then we're going to talk about why is it important? We're going to spend some time talking about why can't we forecast better or even forecast at all? And I know Toby and Thad both have some really great thoughts about that one. How can we overcome the obstacles? We really want to leave you with some practical advice. We want to think about where are we today and what does it look like in terms of the why now and the next normal. And then we're going to conclude with where can you really start your journey on better forecasting. And we'll be asking you, the audience, to be interactive with us. So we've got some polls for you so we can share the wisdom of the crowd here. And if there are any questions or comments throughout the discussion, we'd love to invite you to share them with us through the Q&A button at the bottom of your screen. So let's start talking. What is business value forecasting? How do you really define that, Toby? And why, we talked a little bit about why it's important, but how does that manifest itself within a firm?
Well, I want to take one step back. What firms have done is a budget, which you might call an annual forecast, which is not really forecasting, but it's what they've been comfortable doing. And I have seen, and I know my firm has evolved along those lines. We used to just do a firm-wide budget and then just, splash it across the practice groups. We've evolved to where we take each practice group and they do a budget, and their budget is both revenue and expenses. So and I'm actually more interested in Thad's definition of forecasting. But for us, what has happened is, and you've seen all the firms make their business resilience announcements and stuff like that. And where firms are right now is we're cash based. Most firms are. At the end of the year, we take all of the profits out of our company, and then that's what determines what we're profitable. And a lot of firms, in fact, I'm thinking about one of my former firms. I remember the CFO told me how much money was collected, what percentage of our revenue was collected in the last week of December. And it was a shockingly big number. And so firms are now saying, okay, we don't know, we have even more uncertainty about what December is going to look like. And so the first thing we did was say, okay, we're going to do business resilience, which have been, some pay cuts and some, other cost savings to try to preserve a cash position. Well, all of a sudden, I know at my firm, and I've talked to colleagues at other firms, all of a sudden leadership is very, very interested in what does the next month look like. And so, in fact, I was exchanging emails just before this program with one of my team members, and we developed 2 forecasts within my department, and it's primarily they come from my department. One is from our top clients, and then the other is from the practice groups. And so all of a sudden leadership is like, this information is extremely important because it's going to give us a forecast, a picture of what December might look like. And so that, for law firms, from my perspective, again, I've been at a few big ones, that's what forecasting is starting to look like. But again, I want to look to Thad, because what does a real business actually do with forecasting?
I think there's probably a lot of similarities, but forecasting from our standpoint is an expected discipline that we, even as a small company, had to have, and any board or any investor or any executive set is going to expect that this is a pretty core competency of what we do in running the business. So the way that we look at it, maybe starting from the simplest and getting a little bit more multifaceted and granular, we start every year, our fiscal year, which actually we are in, right? July 1 is our start of our fiscal year. So Pam and I are just emerging from this, and we're brushing the dust off and looking forward to being past it. But we start with a forward projection of 12 months broken down by quarter in terms, not just of budget. The budget is derivative of trying to project what we're going to do from a growth standpoint initially. And we decompose our growth into units by product, which is probably maybe close to a practice thinking. What are the specific offerings that we have by industry, by geography, with some expected price points, which we would call average selling price or ASP. That becomes the foundation and the touchstone of everything that comes after that. That informs the budget, like I said, that comes from that. And then from there, we have a whole series of processes that starts getting into how do we track against that forecast, knowing that you're taking your best guess and it's going to change a little bit this way, a little bit that way as you go through the year. And we have certain processes to do that, which we can talk about, but I'll stop there for a second.
And one of the things that I think is underlying what both of you guys were talking about is that whole idea of actually having data that's real, that's meaningful, single source of truth. How easy or hard that would you say, Toby, within the law firms you've worked on, and how do you get around those issues?
Well, and I want to kind of pick up on something Thad was saying. I'll add a word to what you just said. It's actionable data. Because I assume that a whole slew of decisions are made based on the forecast. So it has been, I'll say, surprisingly easy on a functional level to forecast. Like we look at our top clients and actually have created a grid, I'll call it a risk assessment grid of our top 100 clients, which is something that sort of followed on from the forecasting. But my team reaches out to key people in the, like practice chairs and subgroup chairs, but then also to the client leads, the relationship partners for those key clients, and say, what are you hearing from the client? What are you seeing in terms of workflow and stuff like that? So for those top clients, it's actually been pretty easy, on a functional basis. But, we can get into why we haven't been, why it's been hard for a law firm to make the decision to do it is a different question.
And priming on that, let's pull up our first poll and ask the audience to what degree they actually forecast today. So Janet, if you didn't mind sharing that, and everyone in the audience, if you could fill it in, and then we'll be able to see the results from it in just a moment. So thank you for your participation. Be interesting. Oh, we've got a lot of activity happening, so interesting. Good. I love watching the little blue bars go across the screen. Looks like a horse race. Okay. Let's give people just another couple seconds, and then Janet, if you didn't mind pulling up the data for everyone to see. Okay. So we have about a third of the respondents who said that they do have a standard process that they regularly follow. About 16% said that they produce forecasts but do not have a standard process for producing them. About a quarter are saying we occasionally produce forecasts. We have another 15% who rarely produce forecasts. And then we have a few people who say we don't produce forecasts at all. So we've got, a third of the people that probably follow what would be a great process, and a lot of people who say that there are improvements that could be made. So why do we think that we're not doing a better job as an industry in really focusing on forecasting?
Well, Pam, I mean, there's an interesting, I don't want to steer this a different way, but there's a lot of kinds of forecasting. I don't know if that's a variable in this. It'd be interesting to think through sort of just that. I mean, there's the cash forecasting, which is basically budgeting. There's a more blended generic top line forecasting. And then I think what is most interesting, and I'm curious on your thoughts, Toby, is actually going down into the specific practices, almost down to the partner level. Because I would imagine that for, multi-practice firms, there could be a pretty wide range of different forecasting techniques and certainly different historical patterns you see that might influence this.
Yeah, and in my experience, a lot of the forecasting historically, and I have to say I'm encouraged to see the number who actually say they're forecasting. But historically, the forecasting has been a little upside down. It's not, we expect this client to produce this sort of a revenue number. It's been more, we have 100 lawyers and we think on average they're going to bill 1,700 hours or whatever the number is, and here's their rate. And then therefore we can build up and say our predicted revenue based on the number of lawyers we have and how busy we think they're going to be is X, which is not horrible, but that's not the type of forecasting I assume you do, Thad, where you're looking at customers and what revenue you might generate from them and probabilities and stuff like that.
That's exactly right. We call it the sort of top down and bottom up sort of interlock. So what happens is finance typically comes and starts the process and said, we grew, and I'll pick just a round number, 30% last year, and we would like to grow 35% this year. That's a very top line. That's not really, it's an aspiration. It's a good aspiration. But what we have to do is go product by product and see how that makes sense. What did we do last year in that product? Is anything changed? Did something happen in the industry that one would say there's higher demand? Is the product get better? What is the state of the competitive landscape? What are the changes that might suggest that we're going to do anything different next year than we did last year? And sometimes you say it might go down. If you're deeply penetrated in a market and 75% of your firms own a product, it gets harder and harder to win that next tranche. So we go all the way down on a per product level, and we try to make a units and a price sort of number that hopefully either supports the top level aspiration or refutes it and says, no, we can't get to 35, we can get to 30, or hey, I think we might be able to get to 40 if we added more resources in this area. That's sort of the approach that we take.
And the reasons, some of this is my opinion, but I think it's an informed opinion, that is challenging for law firms to do. One of my maxims is that our profession or our industry is a reputation-driven industry, to where lawyers live and die by their reputations. So if you go to a lawyer and say, instead of saying, how busy do you think people will be, you sort of up the ante on the accountability and say, how much revenue are you or do you think this client might generate in this time frame? Now all of a sudden they're being graded. Because if in the first model, if they say, hey, somebody wasn't busy, that was out of my control. This new model, all of a sudden it's like, well, you said, you forecast the revenue from client X was going to be $1 million or whatever it is. And, if they don't hit that $1 million, all of a sudden it's their reputation. And I've had experiences where practice group chairs have gotten very upset because they just hit their forecast. And that, which means in their mind, because this is not a business function or method that they're comfortable or used to or understand. So for them, if they hit their forecast, it means they got a C, maybe a C plus. and I in one circumstance, this practice chair was very worked up. They were giving their annual report to leadership, and they're like, well, you need to realize, yeah, we just hit our forecast, but or our budget in this circumstance, but we were, X% above last year's number. And everyone's like, oh yeah, you did great. And they were like, we don't want to have these sorts of forecasts anymore. So I assume, Thad, in your world, if someone hits their forecast, they
totally different world. Yeah, no, we are expected to hit that forecast. And it's funny, even if we exceed it, I think people obviously are not going to be sad if you blow through your forecast, especially if there was some special event that might have emerged. But if you really come in way over it a couple periods in a row, people are going to raise an eyebrow and say, maybe you're not the best forecaster, or maybe you're sandbagging a little bit here. What's going on? So there is no stigma attached with hitting your budget, hitting your forecast. I think actually, if you continue to do that, you would be held up as, wow, this person is really good at the management and operational foresight of their business. So that's definitely an interesting difference.
We are a few steps away from that. And the other thing when you go to the partners is they'll say, well, I don't know, when my clients are going to be sued or when they're going to bring a deal to me. And so they use I'll call it the excuse, the reason of, the episodic nature of legal services. So they'll say, that makes it impossible for me to give a number. But my pushback on that is that, okay, let's go talk to the clients. And I'm in a very fortunate position where I have a lot of client interaction. Guess what? The clients actually have budgets, their spend budgets. So the clients have actually said, and I've talked to clients who actually parse out their budgets. In fact, a number of clients say this, we have our budget, and then we have they don't call it this usually, but the episodic thing. So they're like, we're going to spend, $10 million this year on outside counsel. We also have another sort of pool that if we get a big lawsuit or we get a big merger deal or something like that, that's outside their budget. So the clients can actually say, oh, well, this is going to be our legal spend for 2020. So I think they're using that episodic thing as an avoidance mechanism. Yeah. But I get why they're concerned, because this is a muscle they've never even known they had.
Yeah, I think this is one of the most fascinating differences, and it's something that we talk a lot about at Intapp, which is, Intapp has a traditional marketing demand creation machine that ultimately feeds into sales, and we have a whole customer operations process. In legal, for the most part, there's probably exceptions to this, the partners can't create demand. They have to wait for an M&A activity, have to wait for a financing, they have to wait for a slip and fall case, they have, whatever it is, a bankruptcy. And so a lot of what firms are doing is trying to position themselves to be in the right place at the right time when that event happens, with the right relationship, so that they can get the business. So you could imagine, sort of at first blush, forecasting seems very difficult in a world like that. I'm curious on your thoughts, if there's a way, maybe, you don't know what company Cisco is going to buy next, but you know that they're going to buy a certain number of companies a year. Is that how you think about it?
That is how I think about it. That's how I wish our firms thought about it more, because you can look, and in fact, this is a point that you made up front, that it's a very, very good point to take into account, is as you are a data-driven business, we need to become more of a data-driven business, because we could look back at certain clients, and if you go talk to a partner and say, okay, client X, that partner can say, oh, they are an acquirer. They are constantly acquiring other companies. That is their growth model. They're not trying to grow organically. They grow by acquisition. So you're like, okay, that means they're going to have some volume within some parameters every year, some acquisitions, and occasionally there'll be a bigger one. So actually, if you go talk to them, they're like, oh, and if we looked at our data that way, we could say, oh, look at the data. And the data says this is a company that grows through acquisitions, or this is a company like you mentioned, slip and fall. So, Walmart is not a client of my firm, but I have to assume they have a very regular flow of slip and fall types cases and employment cases and a lot of stuff like that. So they're, given their size and the risk of level of the business they're in, you can predict what they're going to have. So that's, and I'll also say this, we do at Perkins regular sort of client lead reports to our management committee, which is our top leadership body. And that more and more, it's always been there, but more and more now we say, what do you think is going to happen with this client? And like we have one client that was reported on recently that develops a lot of patents. And the partner actually, in fact, I need to call him and give him credit for this. He was actually able to say, well, in 2020, they filed X number of patents, and he has looked at the data and said, once you have the initial patent file, there is a known set of follow-on work that goes on for 3 or 4 years. And he goes, so by looking at how many patents were filed this year, I can kind of tell you what kind of revenue we'll be seeing in the following year as we maintain those patents for that client. So I think once lawyers start peeling back these layers, they'll see, oh, this isn't impossible. Clients have regular ongoing legal needs.
So you guys have raised some, I think 3 different kinds of obstacles. One is that it's just hard to predict, which you just gave us some great examples there, Toby, as well as Thad. Second one is that there's just internal resistance. You talked about, well, we're not comfortable doing it. We can't do it. It's not the way we do things. And then it's hard to produce forecasts. We haven't talked about that too much. We'll talk about that in a minute. But let's see what the audience thinks in terms of which of these barriers. So if we could bring up the poll, and I know many of you probably face all 3 of these, but if you had to pick one, what's stopping you most from being able to do good forecasting? So let's watch our little horse race happen, and we also have a question from James Hannigan in our audience, which we'll talk about after we look at the results. So thank you guys all for sharing your thoughts here. Looks right now like we're pretty evenly tied between the first two. Too many factors that are hard or impossible to predict, and too much internal resistance to the process. Less so with the difficulty of actually producing the forecasts. Yep, I would say those first 2 are pretty much neck and neck. And I think in the dialogue that we've had so far, we heard lots of examples of that. So can we share the results there? Wow, you did a good job, Janet, pressing the button right at the equal point, because each one was going up and edging the others out. So it looks like it really is this combination of this idea that it's hard or impossible to predict, and the internal resistance. We'll talk about some, specific ways to overcome the barriers. But first of all, I did want to recognize James's question, and if anybody else has questions, please feel free to submit them. He wanted to know, how can law firms better integrate outstanding RFPs and pitch information in their forecasting? So that's a good specific question that fits into many of these.
I mean, I can start, and Toby, you'll probably have more specific answers, but this is a good opportunity to introduce, I think, an important concept in forecasting, which is monitoring and evolving and updating that forecasting. I don't think it's enough. It's a really nice start if a firm isn't doing anything, but annual planning and forecasting at the beginning of the year with quarterly follow-ups is good. But what you really want to do is you want to have a more continuous monitoring to detect if you are on or off that projection. And the way that a company like Intapp does that is through developing a sales pipeline. And then this gets into, I think, an area where both it connects with the concept of operational tracking like RFPs. I think this is the spot that also is going to create maybe a little more resistance for some of the partners, because it does involve some participation on their behalf. But the way that it works at Intapp would be the sellers, the sales force, know that part of their job is to do some kind of tracking with each of their conversations and opportunities to put in a system where the head of sales can generate an updated real-time forecast to show to the executives to say, here, we're doing okay, or we're off and we need to take corrective actions. And when Toby and I were riffing in the prep for this, I made the comment that this is how we sleep at night. So, when an executive says, okay, we want to grow 30%, it feels so abstract. It just feels like, oh gosh, how are we going to get from A to B? And it's that pipeline that shows you the actual substantive activities that show you, oh, I now have confidence or comfort that we could actually go do that. But for a seller, it's maybe almost equivalent or to how a fee earner timekeeper feels about time. They don't love it, they probably hate it, but they know that it's part of their job and they're not going to get out of it. That's how our sales force is with that, which I suspect is maybe not yet a discipline that the partners have.
You bring up a lot of interesting stuff there, Thad, and I'm going to guess you have, and back to Jim's question. And Jim, thank you for the question. Jim's a good friend and colleague involved in Sally. But I'm guessing, Thad, that you have a pretty good idea how many RFPs you're going to respond to. You're going to have an idea of the revenue value of each one, and then you're going to be tracking very closely your win-loss record on those RFPs. And that's going to be part of your, I'll put that in, as you've said, in the pipeline piece of this.
Right.
Which is a great concept. And when we talk about forecasting, now law firms are going to learn how to use a forecasting muscle, which is going to point them to learn how to use a pipeline muscle. And so Jim's question is I love that question, because I've watched a little bit of evolution in terms of law firm RFPs. At a prior firm, we didn't know whether we won or lost, and it was because the lawyers never told us. At Perkins, I would say we're a lot better at tracking win-loss, but what we could do, to Jim's question, is basically say, okay, in a calendar year, we will respond to X number of RFPs, and our win rate is, Y%, and that average revenue generated per win is Z dollars. So Jim, to your question, you could actually start creating a pipeline or a partial pipeline through that RFP process and say, okay, and so when a lawyer comes in and says, I've got an RFP, I want to put this in, that's part of the mechanism. You say, okay, how much revenue is tied to this? What's our potential success rate, which goes to Thad's forecasting. You brought up another point there, Thad, and now it escapes me. What were you talking about?
well, I could pick up on the pipeline. I was saying that, it's the pipeline that helps us sleep at night, because it's giving us more real-time information on the forecast, but it does require participation from the partners, which is probably going to introduce at least one obstacle. our pipeline, and not to get into too much detail here, but just because the RFP question came up, this is an oversimplification, but we divide our pipeline up into 3 stages. It's actually more granular, but there's a recognition of need in the beginning, which is when you're having the first discovery conversations. And all of this is framed through the lens of the customer. What sort of psychological state are they in at this particular time? So if a firm is going through the process of just even trying to figure out if this is something that is a burning acute issue, is this something that they're willing to invest their time, money, and energy in now, that's sort of the recognition of need. Once there's a very clear decision that says, yes, we as a firm are going to do something in this area, we now are in the evaluation of options stage. They're looking at Intapp, they're looking at other Intapp competitors, maybe they're looking at doing it themselves, which seems thankfully to be less of a situation these days. That's where the RFPs really come in. It's we're gonna do something and we wanna select a supplier and we're gonna go publish an RFP. And I have all kinds of thoughts, most not positive, about RFPs, but I won't share those here. And then lastly, just to round this out, there's a resolution of concern stage where you get selected, there's contract negotiation, but especially if this is a significant purchase, there's always that moment at the very end of, oh, gulp, are we really gonna do this? Is this gonna work? Is management behind this? What if this doesn't succeed? Are we really comfortable with the implementation plan? And we sort of go through all of that, and our sellers are certainly participating in each step of the way.
So your comment jogged my memory there. You've used the term a number of times, sellers. Our lawyers, our partners, have to actually get over that hump and recognize they are salespeople. To your point, Dad, if you're a good salesperson, that I'm sort of, but not entirely making this up. Perkins Coie needs to implement an outside counsel guideline thing. And your people are talking to me and my teams going, when do you think you're going to be doing that? And so your salesperson actually knows Perkins might be, putting out an RFP or whatever at some point in the future. And I will say I'm not a big fan of RFPs either. And in fact, that the other point I would make here is a big challenge for law firms is we respond to a lot of RFPs, and this goes back to Jim's question, where the dollar figure is 0. And it's because, and that I assume you guys don't have to do this. You don't have to run through an RFP just to be a qualified vendor.
Right, no.
Law firms do that all the time just so we can be on the panel. So Pam, I think we have a couple of questions.
We do. Galata has asked, do you use Excel-based forecasting and budgeting templates or something a little more sophisticated linked directly to the financial system?
Do we actually use spreadsheets? I'm not even sure we use. I'm kidding. We are at this point. We are mostly the budget that we do, that is in the financial system, absolutely, and that I'll call that the annual forecast, as Thad has mentioned it. But in terms of forecasting right now, it is just a bunch of spreadsheets. Yes, that is a place where we need to up our game, and it would be smart if we tied it into a pipeline. Right. Wouldn't you think so, Thad?
Yeah. No, I totally agree.
And Thad, we do a lot of thinking around tying together that data from past, experience, pricing, et cetera, and putting it into a consolidated view, the connected firm management. Maybe you want to share some thoughts around that.
Yeah, I mean, the Excel, let's put aside for a minute how the information is expressed at the very end of the cycle. And there's a lot of different techniques one can use there, Excel being one of them. I think that the interesting challenge is, how do you get the right data? How do you connect all the different parts of your business? And I think that's the magic, where you move away from just having these silos, because you talked about employers or the partners being sellers, which I think is absolutely true. But I think they're one step more than that too. They're actually little mini general managers, which is what makes this industry so unique and which makes software need to be so specifically tailored to this market. It's very hard to use generic software here, because the partner is responsible for both business development and getting those sales, also a lot of times for the actual delivery of that, the whole thing through, which is very different than our world, where we have a much brighter line between the different groups there. So I think in order to accommodate that, one needs to have all the different functional roles and functional departments very connected, both at a process level and at a data level. And I think that's how you get the real connected plan that Pam is talking about.
And Jessica Lim asked a further question on this, which is one phenomenon we found is that forecasting bottom up based on careful review of specific matters tends to be less accurate than top down based on broader trends. Do you find the same thing? And if not, why do you think that is?
I'll take a brief stab at this, and then I think Thad can actually probably answer it better. This is actually a project management maxim that there's diminishing turns getting to too great a level of detail. And I would generally agree with that. And the forecasting I've been involved with lately is not, they're getting sued and there's going to be 50 depositions and therefore we think the revenue is going to be X. It's nothing like that. It's just we see litigation activity going up, or we might say we know there's a trial in the third quarter, or we know this big deal is going to close, or whatever it is. So it's not that detailed, but it is, I guess, and I actually haven't thought about this, and Jessica, thank you for making me think about it. We're kind of like in the middle. We're not top down or bottom up. Thad, how do you guys attack that?
I actually agree with that observation in the most part. I mean, if there is a even keel, steady market environment, your historical data is going to be a relatively accurate projector of what's going to come next. I think where that breaks down a little bit or needs the sanity check is when something significant changes. So I think in this environment, the volatility that the markets are seeing right now may be a case where you really do need to dig into each practice area and understand the unique dynamics of each one of those to understand, is the historical pattern going to continue, or is it going to be fundamentally broken? And sometimes that happens, sometimes it doesn't. But as I was saying earlier, we look at that from a market demand standpoint. We look at that from a competitive landscape. We look at that from our own offering standpoint. And is there anything that seems to sort of exceed that threshold of a fundamental change from the prior year? Other than those, I do agree that I think the top-down historical pattern is going to be the most accurate.
And we'll talk in just a minute about the unprecedented change world that we live in now, which you just tipped your hat to, Thad. But before we do, Debbie Campbell asks, Toby or Thad include profitability as an element to consider? Just because revenue is coming through the door doesn't mean you're making profit off of it. And Toby being the profit of profit is probably my thing. And I know, Thad, we think a lot about profitable delivery, so maybe we can talk about it both from an Intapp context, but also the Intapp solution context. But that.
Well, this is, and Debbie, thank you. It's like you threw a softball up for me to swing at. I would love for there to be a profitability tag on everything. And I would say firms, I know the firms that I've been at have been going through an evolution where that is more and more part of every conversation. So yes, it should be. At this point, no, it isn't. I can say for Perkins, which is, a sad statement, and maybe I need to re-earn my, my moniker. But in my ideal world, and we're getting ahead of one of our topics here, my dream world, when you open a matter, it would say the expected revenue on this matter is 25 grand, whatever the number is, and the margin is 12%. I'm making numbers up. Then it's not just a part of going into your forecast and what you expect the revenue to be. It's what do you think the margins are going to be on it. So I think we should get there. And I'll add one other dimension to this. There is one area where we sort of do forecast. It's not really forecasting, but it's a product of our business in that if you work an hour on January 2nd, because hopefully you took the day off on the 1st, when does that revenue materialize with the firm? And it's generally in April or May. And so that is one way firms do forecast, because they say our production value for June was X. It'll get billed in July, and we'll start to see the revenue come in. So that's kind of a forecasting. But so maybe in some respects, firms can just say, okay, we're going to start extending that further and further back up the food chain. So that, I'd like to get your reaction to the profit.
Yeah, no, profitability is very important for us, obviously at a net level, but even down to the product lines. And the way we think about it is we have a product life cycle that we follow. And in the earlier stages of a product, and obviously being developed, but it's being newly introduced to the market, it's going through a growth period, we don't really focus too much on profitability at that point. That it's really more around getting the product right, making sure our first tranche of customers are delighted and super happy, and we have the capabilities that we need to beat any competitors. That's really the focus. As we get into the mid to later stages of a product's life, then you start thinking about, okay, at some point we have to pay back the investment that went into that product. It typically takes care of itself, because as you're in the later stages of a product, it's just the appetite of the customers actually changes. And you hear your customers say, no, don't update this product every 6 months anymore. I can't keep up with you. Like, just, it's great as it is, maybe every year and a half, every 2 years, and we'll be good. So I think it just naturally starts to fall into a place where the hardcore, heavy R&D all the time begins to subside a little bit. We're always investing in the products, but then we start to see the profitability slowly start to rise in, year 5 or 7 of a product's life cycle. And, we measure it pretty thoroughly.
And then taking some of those thinkings that we've learned in other industries and applying them to this industry, that I know one of the key outcomes that at Intapp we try to deliver for our clients is profitable delivery. Thoughts about how we use data, processes, and connect them to people to really drive that more profitable delivery?
Well, if you jump back to, I think, the poll around the obstacles, and we started introducing this concept of a pipeline, I think one of the biggest shifts that law firms are going through is there's this recognition that the old way of operating, where each department has pretty much full authority and carte blanche to buy its own set of applications and create its own data repositories for its own needs, while rational, understandable, it makes it much harder to connect your data and to connect your processes in a way that it's going to support a number of different initiatives, including forecasting, which is becoming more and more important to all Toby's points. And really what firms need is, well, there's sort of overcoming the adoption issue from the partners. And a big part of that we've seen is, well, they need to feel that the information as it is presented is personalized and relevant for them. Maybe that's an obvious statement, but this situation that happened really in the last generation of finance throwing its own tools over the wall and saying, okay, I'm going to give access to the partners here of my financial system or my BI tool or my system, is just it's organ rejection. And there's this idea of how do you actually structure and feed the partners information that's relevant to them. And then the second part is, okay, that's the first step, but now you need to get their participation. And the trick for that is to lower the bar as low as you possibly can and ask the smallest amount. And I think the way one does that is having a connected value chain, having a connected client matter lifecycle. So you're not asking them to have redundant data entry 7 times, because every department has its own processes and its own applications. So the whole magic is, how do you actually bring this together, connect the data, connect the processes, so that you can connect the people and provide that personalized experience all the way up the chain? There's a long way of answering your question, which is that's what Intapp is trying to do to support this market in its initiatives like forecasting.
Terrific, good. And we clearly live in the the curse of me live in interesting times right now with the pandemic, and we've talked about volatility and how this is making things harder. Let's pull up a poll and see whether or not our attendees have actually done anything different about forecasting given this unprecedented world. So if you could choose here, multiple choices are possible. Which of the forecasting practices, if any, have changed since the pandemic hit? We'll give people just a little time to start filling in the poll, and feel free to read down and check all the ones that apply. Looks like right now we're revising forecasts more frequently and more people being involved in forecasting and leveraging more in different technology to capture our forecasts. So it does look like we've been talking throughout the discussion today about the internal barriers, the technological barriers, and the culture change barriers. And it looks like we've got some combination of technology, people, and frequency that are all emerging as the forerunners here. So let's share the results of that poll. Any thoughts about, how do we make it easier to revise forecasts more frequently, to get more people involved, to be able to leverage more different technology, to do this at a more rapid rate? And I thought that these black swan moments are probably going to continue, and we need to really build the muscle here. What have you changed, Toby, within your firm since the pandemic hit? And from
I've mentioned a lot of it, but I would say it's creating a changed mindset. And to your point about, how do we keep this going? How do we make this more robust? One of the conclusions I'm coming to, in fact, I love, people always say, when are we going to get to the new normal? And I'm like, you're here.
It's as good as it gets.
But in my judgment on that is sort of twofold, maybe two edges to the sword. Something that has absolutely changed because of the pandemic is law firm leadership. So how are we going to get this? How do we motivate people? I think we're to a point where leadership is, we need this and we need this now. And in the past, it would have been a 12 to 18 month dialogue about the values of forecasting and why we needed to do it, and to get the partnership on board and get people to do it. And now it's like, no, give it. We need it now. Sorry. So I don't think, of course we want to have motivation and change management long-term to really get partners on board and involved. But the other side of my sword is I fear that as we've reached the new normal, partners haven't had to change that much, which is driving me crazy, frankly. So I'm glad that leadership has changed in their thinking. And by leadership, I mean in the industry, because you're seeing it when I talk to colleagues, when you see, the media reports and stuff like that. In fact, the one I saw today, a firm has announced it has a non-office. They're going to have an office designation that is, I don't have an office. And that I think, in fact, if you read the article, and it was Hush Blackwell, they said, this just makes sense and we're going to do it. And somebody from leadership had suggested it. So, but that article also said they've been talking about it for 2 years, but now they just did it. So that's where my thinking is. I think law firm leadership is realizing we need to get to a data-driven decision-making process, which, takes us back to where Thad's talking from.
I totally agree with you. And I don't have as much contact with sort of the rank and file partners, but I do spend a lot of time talking with leadership in different roles of firms. And I totally agree with you that while a lot of this and these preconditions existed before COVID, it seems to have really accelerated. And just the vocabulary from leadership has changed. We're hearing, this idea of a holistic digital strategy all the time now. And they're really trying to figure out how they are going to go through this. I hate this phrase, but it's sort of true. This digital transformation. They're looking at all aspects of their business, and they're trying to figure out how they're going to come out of this crisis and be able to capitalize on what will inevitably be an opportunity to be more competitive. And I think forecasting is one example of that modernization and that digital transformation that they're very much thinking about at leadership level.
That's great. So we have a few minutes left, and if we wanted to, we've talked about kind of I'll call it making the impossible possible, and we've had a lot of good ideas. If there was one thing that you would suggest people start with or do differently coming out of this discussion that they may not have thought of, what would you share with them?
From my perspective, I probably already shared it. Force the issue, go to leadership. Demonstrate. In fact, I mentioned I had that risk assessment dashboard I put together. I shared that with leadership, and their eyes got really big. So there are opportunities to sort of raise the temperature level amongst leadership around the value of forecasting, and it starts the conversation into pipeline and to everything else we've been talking about today. I mean, now is the time. Take advantage of that opportunity.
Great.
And I would add, sort of the obvious maxim of, think big, start small. But if a firm doesn't have robust forecasting, even an annual process with quarterly follow-ups is a step forward. Ultimately, I think getting to a more continuous evaluation of that forecast is going to be incredibly valuable and healthy. And firms will wonder how they survived without this, I think, when they experience it. And under the hood, I think the way that it can be enabled is starting with the data, being able to break down the traditional silos, which I'm telling you are just the biggest obstacle, be able to connect the data and then think about the processes across the departments, across that client matter lifecycle, and begin to try and connect that, because ultimately that's how you're going to sell the partners, is to minimize the friction and the ask of the behavioral change on their side.
That's terrific. And before we conclude, we'd invite anybody in the audience that has either tried something recently or wants to try something, if you could put it in Q&A and share your ideas of what you've done. We'll share those back out with the attendees. So feel free to use that Q&A button and put in any observations, suggestions, things that you may have done recently. We really appreciate everybody joining us today. We'd love your feedback on how this session went for you, what we could do better in the future. And we'd also welcome suggestions for future topics. If you do have any suggestions and want to send them, we'd love to have them. Just send them to info, I'll put this on the screen here, at legalvaluenetwork.com. Again, I want to really thank Toby and Thad for what I think was a really illuminating and interesting discussion. And we'll look forward to continuing this discussion in future sessions. Thank you, everyone, for joining us today.
Thank you, everyone.
Pam, I want to take 1 minute and say thank you to both you and Thad and to Intapp. And let our audience know, Intapp is our first founding sponsor of LVN. And that's been critical to getting LVN up and running. And we are grateful for your support and for your participation. And this, back to something I said earlier about one of the core values of LVN, that just brought a wealth of information around forecasting that law firms probably would have never thought about, and now they've got it on their radar. So thank you.
Well, it's our pleasure to be part of this, and we'll look forward to doing more in the future.
Yeah. Thank you, everyone.
Thank you.
Delighted to be here.
Bye-bye.